Hello traders, good morning, good evening. How are you today? Please give me some okay you can hear me. And that you can see me. Oh no, you can't see me. Now you can see me. Alright, wonderful. So, I'm good, thank you very much. Everything is wonderful. The weather was crazy here a bit yesterday. Scary winds, 100 plus kilometers per hour. It was pretty weird. First time we had it here. So anyway, it's behind now. The sun is back. The skies are blue. The birds are singing. It's a perfect day, right? Awesome. Okay, guys. So one day before the non-farm payrolls, and we can see the sensitivity the market starts to be in terms of zigzags. It's very seen on the short term, mainly on many of the pairs, and that's normal. And that's part of the things. Many pairs reached, mainly on the crosses, reached some important levels. So let's go over that and see what do we have in our use. Okay. So the first one I would like to start with is dollar Canadian. This one reached our 61. Let me start the epic pen. Where's my epic pen? Where is my epic pen? Here we go. So the first one we got was this cycle, and we got the 61.8. Now it starts to show some bullish signs in terms of the divergence. So this is a great place for those who are in short, of course, with these trendline breakouts or any other setups. This is a great place to consider to cash out at least part of the profits. Because if we start to pay attention to the warning signs, that's exactly what the warning signs mean. And the final destination would be still, for us, at least for this stage, it would be the 50% of the triple cycle, which brings us towards 127, slightly lower. And that will be also the same level for the 38.2. So we can see that we are not far away from there, but still have like between 70 to 120 pips potentially to go lower. Okay, and that's why a partial closeout. Now we have a bullish warning sign on the 4-hour chart. So the best way to join anything like that would be to get a bearish hidden divergence on the same time frame, on this time frame, the 4-hour, or get a pullback in two waves on the 1-hour chart. Okay, then and only then we basically have a possible continuation sign to the bearish. All right, that's all. So this is the first pair we have going. Pound Canadian, another pair that we said we start to look for the sells, and we have it on the short-term ideas right here. Right, that was our plan. Back to these trend lines, 1, 2, and we got that basically going exactly back to the trend line, and provided us a bearish hidden divergence here, right? And this is exactly what we are waiting for always, to see after bullish kind of pressure pull back on the same time frame, get a bearish hidden divergence, which we got here, right? And then we drop lower on the lower time frame. There is no divergence on this trend line, right? There is no divergence here, so there is only divergence on the bigger one, this one. This is the only entry based on trend lines, or alternatively, what can we do in that case? Systematical trading. The slope on the 4-hour chart of the, let's say, on the triple B is bearish. On the daily, we are now below the 20 MA as well. So rallies could be go and to be sold as option number 1, option number 2 SRS, option number 3 Scorpio. That's the best ways here to enjoy a possible continuation of a trend. For false breaks on this top, we didn't have, so Libra couldn't be in play, Libra code. So that's the usage of the systems in an ongoing trend when we don't have the manual confirmation. So as I said, the only option was this trend line, the big trend line, or the 1, 2, 3 steps, 1, 2, 3 breakout. That's the only two options basically to be involved in such an opportunity when we don't have anything better in terms of trend line on the rally. Both scenarios are paying if this is the step trading, the 1 to 2 risk reward already reached. If it's the trend line, this is the entry. Let's clean a bit, and this is the entry with the trend line breakout. This is the stop loss. And at this stage right now, when we have the 1-to-1 risk reward and the bullish divergence against us, we can take our stop loss move to break even. Okay, and basically cash out. And I would even consider to cash out fully for one reason, that it starts to create also the divergence against us on the 4-hour chart, which very likely means that this is going to be most likely a bottom soon. If we start to measure cycles, corrective cycles, we can figure out that we are also right on the 161.8 on this cycle, and we are right on next to the full duplication of this cycle. So you can see that the zone starts to be very critical here, and this is where it normally is a smart move to cash out. So for all those of you who follow the pound CAD short idea that we've had, this is a time to make some profits, the bottom line. All right. Yen pairs, another great opportunity that we've had. By the way, for all those of you who are long, we say that during non-farm payrolls weeks, statistically, that's not a mandatory, right? It's not a rule. It's not anything like that. But on Monday and every non-farm payroll, we mentioned that statistically, during non-farm payrolls weeks, the yen itself tends to be weaker, which means the yen pairs tends to be traded mostly under bullish pressure and provide some rallies during this specific week. On the short term, I'm not talking for investments here, I'm talking on the short term during this very week. And the yen pairs so far do that exactly. So what we've been looking to do was basically join the running trend on with the daily cycle. You remember this, right? This is what we are trading here after the two false breaks and the trendline breakout on the 4-hour chart. We got everything we wanted to see here basically. So now we expect it to continue higher, and it still has the room. It still has the room. So our goal was to go and join the rallies with the bullish divergences, right? In our case, most likely because this is ongoing trend, it would be bullish hidden. That could be on the 4-hour chart or on the 1-hour chart, as long as the 4-hour chart does not have any sign against. On the 1-hour chart, we got ourselves a bullish hidden divergence right on the spot, right here. Now the problem with this divergence is we don't have two waves breakout that we can go and really join here, right? Because we always love to see 1, 2 breakout. This is the classical entry. In that case, we didn't have any. This is not a trend line we can measure due to this one, right? Due to lack of move. That's the bottom line. So what we've had here is 1-hour chart bullish hidden divergence, lower time frame bullish hidden divergence confirmation, and the only way to enter such trade is with a system or with the 1 to 3 step breakout, or aggressively, as you remember on the previous weeks we've been showing that go to one lower time frame, because 1 hour and the 15 minutes both were bullish hidden divergence with the continuation, drop to lower time frame and find the reason to enter here. In that case, that's a classical double bottom with a beautiful kicker pattern on the place. At the moment we got this breakout, or we start to create the higher highs, basically that's all. That's the entry. Now that's the only way that we could manually join the dollar yen, or in that case systematical use, which means any kind of systems or strategies. That's where their advantage is, because they're not required any kind of technical involvement of Fibonacci's, deep retraces, waves, or anything like that. So that's all. That's the dollar yen going up. It took the rest of the pairs with it. The CAD yen was doing basically the same idea, providing the bullish hidden divergence for a trade. The New Zealandian yen, which was one of my favorites on the previous week, continue on its go. Aussie yen, Euro yen, and well, the pound yen was always in both directions, so that's not really new. All right, so that's all. That's for the yen pairs. Any questions as for now about any of these guys? So this week we can say simply and proudly that the statistics of the yen pairs during non-farm payrolls week again prove themselves. Again, it's not like that's all. On the next month, I'm going all in, going to take 100 lots and buy the yen, buy the pairs against the yen. That's not the idea, right? But if we get the bullish cycles with the bullish setups during these weeks, these chances are very high. Very high. Okay, so that's all. Great. So that's for the yen pairs. Also gave us some beautiful opportunities, a beautiful payout. Marcos, Aussie yen break of. Let's take a look. Aussie yen. We are talking about the daily, right? For the daily convergence, it must break this high. This is not relevant high because you don't have two candles rule on a daily chart. Okay. Now on the 4 hour, you have yourself, yes, this one. This is your high. Exactly. And it looks like it's building here some kind of very weird triple cycle, right? So that could be some kind of beautiful continuation deeper. Agree with you. And we should remember that according to the daily cycle, this one, right? We are good to go all the way up to here before we deal with any further sells for the long term, right? So anything like that would be more than welcome for us. Agree? And if you take the double cycle, this one, which refers to the daily, of course, you get yourself the same zone here. So yes, okay. By ideal, as long as this invalidation low holds, it's safer, and I would say in that case smarter to look for the buys opportunities rather than sells. All right. Awesome. Okay, so that's for the yens. Any more questions about any of the pairs we discussed by far, guys? You are very welcome, Marcus. Okay, Aussie versus the Kiwi. This is one of my favorites for the long run. That's not a secret. I always have been talking about it. Like with the cat franc. Remember, we have been waiting for the cat franc all this period, give us the setup, give us the setup, give us. It takes time. For a pair to pay, it takes time. And I always keep repeating that. It doesn't matter how much we wish, it doesn't matter how much we pray. There is no one upstairs listening when it comes to trading. There is no one up there listening. There is no trading God. It doesn't exist. There is no trading power. It doesn't exist. So our prayers should be directed to the right places, not to the market. So that's always something to remember. It doesn't matter how much we wish. When it comes to long-term cycles, it takes time. You probably heard me and other people saying patience, 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 patience is the key. Well, it is. There is a reason for us keep saying that. It is. And there are no shortcuts when it comes for long-term trading. You know, my favorite quote from Warren Buffett about shortcuts and patience is you cannot produce a baby in 1 month by making 9 women pregnant, right? That's impossible. So it's of course very, 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 very relevant to trading as well. You cannot make the market move by taking many positions and just saying, but you have to move, give me the move. It doesn't happen. So it takes time. Sometimes we are talking about a long time. Okay, and this is something to remember. Now, Aussie Kiwi is basically starts to remind this behavior. Look at the cat franc, look at the Aussie Kiwi. They start to look kind of the same, right? At least in terms of behavior. So it's going to take time, but this is our critical zone where we are most likely, and I might be wrong, of course, but at this stage, it looks simply stunning, simply perfect. Okay, so we got ourselves here the levels, this, and on the pink one, we get ourselves that divergence developing. We got ourselves a cycle which comes from the monthly range. False break, and we're on the bottom of the range. Possibly trend line and bullish hidden divergence to be developed somewhere very soon. And the weekly cycle also potentially developing for us, well, that's the same trend line from the monthly, potentially developing for us some kind of bullish hidden divergence on the coming weeks. So no, it's not ready for a trade right now. Yes, it's still technically possible to short it, but as I said, I am conscious just for myself. It doesn't mean it's wrong, just for myself. I consciously avoid the sells here simply because I believe that when the buy setup will come, it will be much safer, with bigger chances, and with very high probability to do it fast. That's all. So that's where we are waiting. So currently no setup. The reason I show it is because I got many questions about it. And I want to repeat that from what I said yesterday in the live room. We do not have the setup for buys yet. We don't have new false breaks. We don't have new higher highs. We do not have even trendline breakouts or anything like that. So the bottom line is, yes, it could still on the short term go lower. And ideally it would, because the 161.8 of this cycle takes us slightly lower towards 104. This is exactly the place where the weekly trend line lies, pretty much, well, slightly lower. And this is where the bullish hidden divergence might form, or we just reach another time the bottom of the range. It doesn't matter how we turn it around. It becomes very sexy. It's growing to the place, it's growing to the setup we want to see. And patience is key. So for those of you who scalp, yes, this pair is still acceptable for short. 2 waves retraces bearish hidden divergence, still tradable to the downside. As I said, I myself going to skip that, but it doesn't mean it's wrong. So currently I remain neutral on that. Wait for this, it's going to come. Marcos, you say there is no false break where? Oh, cat franc. well, there was a false break on the pair with the aggressive. If you remember, we have been talking about the no, I forgot the name. The alternative trend line. Remember? Since you have yourself a daily cycle, you can find yourself the false break on lower time frames. And the 4-hour chart gave exactly that. We had here horizontal false break and alternative false break. At the moment it happened, it started to be good aggressively. Then we got ourselves the cross of the high. And from this bullish hidden, game over. We are only after buys. Let's say there were better setups in the past, in the history. But well, yes, it's very easy to forget that alternative trend line. I agree. Totally agree. All right, let's continue, guys. The next one's on the list, Euro Kiwi. We are bearish since the break of the trend line here, right? Expecting it to go lower or at least to the bottom of the range. All right. So far going good. No special signs were there all the way down. Now it starts to smell suspicious with this kind of divergence. So 2 waves up on the 1-hour chart, we can go for sells. We could go for sells because now we have the divergence against, right? So this was a nice opportunity, but due to the bearish divergences, it makes the risk right now. It doesn't crash, it retraces, which means it respects the divergence at this stage. So we should wait. We should get for clearer 2 waves or false break, and a range. Okay, so Euro Kiwi, we are for short, but there is no clear setup at this stage. And we have to keep an eye here on this 161.8. It's kind of a fight here. A fight that when we have a divergence against, I don't think it's too smart to go and fight right now. It was good. It was good on this attempt. It was beautiful, bearish hit and everything. But now with the divergence against, I would wait. Same with the Euro Aussie, which we have been enjoying the ride down, but now we have to pay attention to that. The 100% holds. Even 61.8 still holding. And on the same time, we got ourselves 1, 2, 3. Triple wave. So now we have a bullish divergence against us. By ideal, we would like to see 2 waves up or bearish hidden divergence on this time frame. The bearish hidden must be on this time frame if forms, and then and only then we can say, all right, so let's take a look for possible sells or clear 2 waves on the 1-hour chart, which we still don't have with divergence. Currently we don't have, so this pair can take it higher. Okay, you see that, guys? And this is where the shorts on lower time frames are risky and not too much smart because of that exactly. All right, so that's very important to remember. So we want to see the rallies and we are after sells. Same with all the other pairs. Pound Aussie dancing around that, and as we said, we want 2 waves and start looking for the buys, right? So the second wave is still forming. We have nothing clear to trade there currently at this stage on this pair. So what pairs do we have and what pairs start to look very interesting? The pound dollar is the first one. As you know, we have the both scenarios in play, right? But due to this kind of a double top, we said we would preferably look for possible sells. On the 4-hour chart, we got triple cycle to the upside, which much better seen on the 1-hour chart in that case. We got ourselves the first push down and the correction. This correction is being broken right now. You see how many zigzags are involved with the pound dollar at this stage. You see how many one big candles are involved on the pound dollar, right? So this is a say from the market that, hey, it's aggressive trading. This pair, whatever happens with it, is an aggressive trading. Now, what could and should happen here? So first of all, the 50% of the 4-hour chart, which isn't too much far, but can still go and pay nicely, especially if we have a pullback. Then we have a lower level suggested. On a daily cycle, if we are about to develop, and I say if because it's under big question, if we are about to develop this kind of triple-double breakout, that might be the beginning. And I repeat, it might be a beginning because there is nothing obvious at this stage for this pair. It might be the beginning of the move towards the 138, 136, which will take us back to the big trend line. Okay, so for us, in that case, with aggressive approach, we can start look for possible sells, retraces, and the smartest thing to do is to use this little level as an invalidation. Because the play here is aggressive, the best way to do that is to do double confirmation, which means get 2 waves pullback after this breakout, get 2 waves pullback or a bearish hidden divergence, and then and only then look for a setup. If we play in aggressive conditions, the best smartest thing to do is to play smart or more conservative. Dollar franc taking the 50% retrace of the daily. This is a very, very heavy level. No signs for retrace yet. The divergence is still potential. No trendline breakouts yet. And we must have the breakout before we start looking for sell. Once the breakout completes, we are after sells. As long as it did not happen, there is no reason for sell. So yes, we have the level. Yes, we have a confirmation in terms of divergence. No, we don't have any reason for sell yet, which we call a setup. It might be coming. It most likely is. It's dancing around critical levels. It could still push slightly higher, but we do definitely after these zones. Once we got the trendline breakout, or alternatively, create here false breaks, 1, 2, and lower lows, we can start looking to sell the rallies. All right, so that's for the dollar franc. Cat franc going well, pushing up higher, starts to develop some warning signs now, and I believe it will slowly start to slow down to this area, where from most likely we're going to get the corrections down. So for those of you who are riding the longs, just keep an eye on this critical zone. The divergence start to develop in the cycle. This is also the cycle by itself. The daily is bearish hidden divergence. The combination starts to put the pressure here. It should be critical zone. It will be very good and very smart to cash out for, again, for all those of you who are involved with the buys on this beautiful pair. Pound franc also approaching towards the 136. Yesterday we got it next to 135.35. It starts to show the signs for possible divergence. It will not be one way, most likely. It would be something like headache, right? It's classical place and classical opportunity for the stop loss hunters, the algos, and the traders like I used to be in the past. It's classical opportunities for them to start hitting the short-term options, covering those traders that are not so experienced in that places, and very big chance we're going to be exposed to some kind of spikes. So every opportunity, and very big chance, of course, it will even climb with the spikes towards a new high. This is a classical place for stop loss hunting, classical condition, classical reasons. So do not, the reason I show that, do not rush and get tempted by any kind of maybe trendline breakouts like this. The chances to fail here are much bigger than the chances to success. And we don't want to play with chances. We want to play with facts, right? And with facts, it's a clear saying still that be careful, don't rush. Okay, and I show it exactly because of that, guys. Because it's, let's admit it, it's too tempting to get involved with any kind of sales already, right? Let's admit it. The level is amazing. The trend line alternative is amazing, but we have to remember: no lower lows nowhere yet, no 3 waves down yet, nothing. So to come and say I want to sell, it's a pure bet. We don't want to bet. We want to trade facts. All right. Euro dollar continues. Well, we continue to look for the bearish setups, ideally, but keep an eye on this situation, guys. It's a warning sign. It's a warning sign. It might have issues, and it's refusing to break this range for too long time. It starts to look suspicious. It has to break it in order to make it believable. Currently, it's still bearish. I would not be surprised if we continue lower from here, but pay attention to this cycle. This is a very, very serious potential for a stop, break, and maybe another reversal. So if that happens and we start to create a trendline breakout and get higher highs, it might be the continuation to the upside. So everything that goes with sales at this stage simply must be small risk trading, conservative trading, or simply avoid. Many traders love the euros. I can't blame them. Very good technical trading, but there are times where it's simply not ready. Pound versus the Canadian. We are for sales. We want 2 waves retraces. We currently have only one. So it could be also a range. In that case, we would like to see that climbing to the top of the range, right? Or making us 1, 2 to go for sell or bearish hidden divergence. Currently at this stage, we have no setups, not with that. So the only way to trade anything like that could be systematic with systems, or wait for another wave and then start looking for the trendline breakouts for those who trade manually. Euro versus the pound, we are after sells as well. The first push from the beginning of the week paid beautifully. Now we have kind of a double bottom, which mainly would be seen on the 1-hour chart. So we are good with retraces. If we get another bearish hidden divergence, that's another place to start looking for possible sells. Alternatively, we are for a bit bigger correction and a continuation. Our plan not changed. Once we get a setup with the 4-hour chart, because we want to join the weekly cycle mainly, right? Once we get a setup, we can go and be involved in the sell. Any 4-hour charts had a bearish hidden 2 waves, top of the range. That's all the sells for us with this pair. Gold and silver remain not clear. I myself don't see anything clear here, anything obvious, to be honest. Yes, it's a bullish hidden divergence. Yes, it's bearish divergence. Yes, that's a potential bullish divergence. So that's exactly what I said yesterday. When we have nothing clear and good to rely on the long term, we go with the short term. And the short term means the setups from the 4-hour chart divergence. So this is the wind. The last divergence formed with this instrument That's what we can trade on the short term. I still think that to get a setup here is very hard manually. Such conditions are mainly for systematic trend lines, not technical tools, not like Fibonacci retraces, which would be not reliable, not like false breaks, not like trend lines. That's all technical tools, right? Technical tools in such conditions tend not to work. So the only way to enjoy something like that on the short term is systems, any kind of them, ideally those that provide opportunity to work with short term. Same with silver, which is approaching to the bottom of the range again, trying to hold by far. So again, you can see yourself. You judge yourself, guys. You judge yourself. No secrets. So yes, we are looking for clear setups. Currently, this is a bullish divergence. If it ticks to the upside, yes, we can start looking for the intraday buy opportunities with the setups, right? But it has to be intraday because there is nothing clear. You see, and you see how it moves from divergence to divergence in these ugly conditions, from bearish to bullish hidden to bearish hidden. That's how it moves on the intraday. And yes, it's in zigzags. That's why I say the manual tools, technical tools like Fibonacci retraces, like trend lines, like false breaks, all the mathematical logical tools tend to not to work on such conditions for that instrument. Oil, natural gas unchanged. Indices, well, we are good with the corrections. We get the corrections mainly on the ones we want to be involved with, the German DAX and the UK. No, that's UK oil, sorry. Versus, well, the UK FTSE. I don't see anything to prevent it going. We start to pay attention to the bearish hidden divergence developing on the daily chart. Sorry, to join the weekly cycle. We do start to pay attention to the 4-hour chart levels. 61 is currently broken, so there is a good chance for 100 next. Who knows? Maybe 161.8. And honestly, I would prefer the 161 in that case because it would also be a very high possibility for a false break on the top of the range. That could be a classical sell again. As for now, short term remains still bullish. It takes all the indices into the same journey. That's the European. That's what's going on now with Dow after this triple and the 4-hour chart divergence. So same everything. So currently we are in bullish corrections, and that's the bottom line. Two stocks we are involved with. Facebook, we are in sell, and Peugeot, which we are looking for. Where is my Peugeot? Disappeared. Where we are looking for the trendline breakout. Still didn't happen, so we still can't say we are okay. We are ready to attack the sales, but it's on the list for the watch list. Cryptos unchanged for us. We need the 2 waves pullback, and then and only then we start to look for the breakouts. And as I said on Monday, it could be taken for all of them because they all represent something of the same zone. For IOTA, we have a new breakout. The divergence is still here, right? We have an invalidation of this low, which means we need a new trendline breakout. The current trend line of the divergence of the moving average is this. So this is a trend line that has to be broken, then pull back and breakout. If that doesn't happen, we can't trade it, and I want you guys to remember that. Too easy to find a reason to trade. The smartest thing is to wait for the setup. That was the breakout, right? This trend line was the breakout. We are after buys. Did we have 2 waves pull back? No, nowhere. So we can't and we shouldn't yet risk money. That's all. Wait for that. If it comes classical, the chances are big. If it comes like this, forced, when you say to yourself, let's bend some rules in order to be involved in a trade, the chances to end up with profit are very low. As simple as that. Remember the non-farm payrolls tomorrow, guys. Don't force things to happen. Remember what I always say, it's better to skip than to regret a wrong action. And that's all. We have the list. Some of the crosses we were following, like the pound card, like the cat franc, pound franc, etc., are the ones to keep an eye on. Euro pound, the list, and several more, the same list that you have and know. Tomorrow is Friday, non-farm payrolls. We don't have a meeting. That was a good question, Marcos. That's a good question because we had some technical issues with the uploads. That's the problem, guys. For all those of you who were involved in the competition, just go to the site. Let me just show it for you. Just a second. I stop the screen for a second, okay? Okay. No, sorry. Go to the traders competition. When you are inside, you have the option to upload your statements, right? And what you can do alternatively is to email the statements to the support team. That's support@tradersacademyclub.com. Okay. So for all those of you who were involved, please follow that. I will send email. We had to fix the uploading thing there. There were some bugs. A new competition would begin next week, simply because this week was with some issues. So we will start at just 1 week later. The same idea of the quarter. Email will be sent. So just keep an eye on that. Marcos, thank you very much for shooting good questions today. You are very good, active today. So that's all, guys. Keep an eye. And for those who did not take part in the competition, you are invited on the coming quarter. For the coming quarter, just please check out and read carefully the competition rules. And that's all. Okay, so I wish you good luck. And of course, follow up for the email because it will be sent today. Thank you very much for being here, guys. Thank you for a very nice week. I wish you a perfect weekend, and I'll see you the next week for another exciting trading. Ciao for now. See you in the live rooms, in the Telegram groups. Bye bye.